I know you know about your crypto, Aaron, so I might let you lead that one when we get to that one later. Okay, we've got Paul as well. Okay. Bear with me. I'm going to get started at 8 on the dot, hopefully. The YouTube has now gone live, so that now means I've got to say my little disclaimer. One sec. Disclaimer. That is disclaimer. Please do your own research. Our content is intended and should only be used for informational use only. It's very important to do your own analysis before doing any or making any investment based on your own individual circumstances. You should take independent professional advice from a professional advisor. I am not a professional advisor. I do not claim to be a professional advisor or intend to be perceived as a professional advisor. Or please, you should take independent professional advice from a professional advisor, or independently research and verify all and any information you may see on the show that you wish to rely upon, whether you wish to make an investment decision or otherwise. There we go. So if anyone tries it, I've done my disclaimer. Cool. Right. So let's share. We've got Aaron trying to join in. I don't know what's happening with Aaron's thing there, but let's share my screen. Cool. Rashid. No, we don't want that one. We wanted this one. Yeah. Boom. Okay, cool. So let's get into it. I got some juice for us today. So okay, so the future is now presented by Apex Capital and your boy Michael Hardin. I'm just going to hide this thing there because it's annoying me. Okay, cool. So this is another episode of the game. Thank you for attending. If you're not playing the game, then you're probably getting played by the game. So let's get into today's subject. First of all, we've got this week's earnings calls. So we've got some major players happy with their earnings calls this week. I already announced some of them in the 2 o'clock call, but let's just go through some of the big boys that are shouting out today. Tomorrow we've got Johnson & Johnson, Verizon, Raytheon, General Electric, American Express, 3M, Prologis, the REIT. We've also got Capital One, AMD, Starbucks, Texas Instrument, and Microsoft. So expect massive movements on the S&P, expect massive movements on the NASDAQ. The ones that I'm pretty bullish on, 3M, I'm expecting big movements from them. AMD, they're my baby. So definitely. Microsoft, when did Microsoft ever have a bad earnings? And then also potentially Starbucks is one to watch out for there. And then Wednesday, we have the big day, which is going to change everything for the markets. Everything's going to go up on Wednesday. And we have AT&T, which isn't really a big one, but the big ones are Apple, Tesla, and Facebook, the fatty. So start watching out for that one on Wednesday. The market, you're going to get news everywhere about that. Thursday, we have MasterCard, Comcast, McDonald's, and also Visa after hours. And then on Friday, we have EY Lilly, who have obviously got some rights to distribute the vaccine, Chevron, SAP, Honeywell, and Caterpillar. So those are a couple to watch out for there. And we've also got Caterpillar is one I would definitely watch out for because of the whole building thing, and Biden being back and a bit of stability being in America. So what we're going to look at first, before we get into the cybersecurity, we're just going to talk a bit of long-term investing first. So one of the things that I've been a victim of myself is not holding my positions. I've been a victim of not holding my positions in Zoom, not holding my positions in Tesla, and paying the price because getting out of them thinking, oh, it's not going to go further than this, and then it actually skyrocketing up after that. So this is just some information to just show the number of negative periods that the market has had over 91 years. So if we look at it in a 1 year period, we can see 73, 66.
Mike, you can't see anything.
You still can't see anything. A minute, let me stop the share. Whoa, it's busy in here. Okay. There we go. What about now?
Perfect.
Perfect. So we can see over the period of time, let's say, for example, 3 years, it's had 74 negative periods and 15 negative periods, 74 positive periods. And that's 83% versus 15% negative. Now, over a period of time, so when you start doing it, investing for longer and holding for longer, you can see over a 10-year period, it's 94% to 6%. So the statistics show that over 91 years, you are most definitely better investing than you are leaving your money in the bank, period. And just sticking, even if it goes down, it just pays to stick. Now, here's just something on taking your money out of an investment, the damage that it can do to your portfolio. So we can see here, if you just invested £1,000 from 2010 to 2019, and you took it out and you accidentally missed the top 20 performing days, you would have only ended up making £97 extra, $97. If it was top 10 performing days, then again, it would be 1,723. Now, it gets crazy when we look at it over the 20-year period, or in fact, the 30-year period. The difference is crazy because just by missing 20 days of the market, you end up losing out on almost £15,000. So again, you can see here, it definitely pays to stick in the market. Now, what we're going to talk about just before I get into the ETFs, I really want to make sure people understand what the EMA is. So the EMA is the moving average. So it's just the price that the average price that this stock has been at. So you got the EMA 10, 20, 30, 60, 100, 200, and 250. Now, one of the most prestigious and most successful tactics with the moving average is just simply as soon as it crosses over the moving average, you buy. And when it crosses below the moving average, you come out of the position. That's the most simple one. Then you've got a slightly more advanced one, which is where you use the 50-day moving average and the 200-day moving average combined. And when the 50 crosses over the 200, you sell. And when it crosses the other way, you buy. So can it beat the market? The 200-day EMA moving average from 2000 to 2016, if you follow that method, you would have had 317% on the upside and minus 17% on the downside, versus the market producing 125% and 55% on the downside. So you can see it definitely is worth looking at and understanding the EMAs. So here again in 2020, would it have worked in 2020? Yes, it would have. We can see that using this 200-day moving average strategy, you would have gained 192%, and your biggest drawback would have been 12%. So cybersecurity, the bit that everyone's been waiting for. So why cybersecurity? Just because everything moving to crypto, everything moving to online, with the big emergence of things like the Internet of Things, where people's homes, literally everything in the home, whether it's your fridge, whether it's WhatsApp, whether it's like everything is moving online. And whether you like it or not, really, it started off with people who would have imagined that you'd be paying your bills online. Who would have imagined that? Who would have imagined that you'd be going to a doctor's appointment online? Who would have imagined that you'd be able to book a holiday or a flight online on your mobile phone? So we can see that the biggest motives behind cyber attacks are actually ransom. So it's actually just people that want to take advantage of people. It makes up 41% of the problem. Then it's an insider threat for companies is 27%, political reasons 26%, competition 26%, cyber war 24%, angry users 20%, and then motives unknown is also there. So when we look at the numbers of what it's costing, is quite amazing. Cyber attacks caused 450 billion of damage to the global economy in 2016, and the numbers predicted to keep on rising as we keep adding more connected devices to the mix. So you probably heard that one of the big things that happened, I think it was last year, was with the Mr. Khashoggi, who got in a bit of trouble with the Saudi government. they actually hacked Jeff Bezos's phone. So it just shows that it's very important for everybody. Nobody is safe. You just have to have protection on your phone. Now, the magnitude of this impact should not be understated. It's bigger than the size of notable economies like the UAE. So there is more damage done in cyber attacks than the equivalent amount of money in the UAE or Norway, which is why it's no surprise to see organizations put in major resources to protect themselves. And again, what's going to cause an increase in crime is just the gap in poverty. So as the rich get richer and the poor get poorer, people are going to start getting more and more angry at tech companies, at big tech companies, and we're just going to see more and more hacks. Now, one of the things I encourage everybody to do is to just have a watch of the movie Snowden. It's about a gentleman that used to work for the American government called Edward Snowden, and it's about how and why he decided to stop working for the government and started leaking information about what they were doing, because the amount of information they were getting and taking and recording from people's phones that weren't even not just American citizens, but everybody. So it's very, very interesting. And he's on the run at the moment. He's currently got nationality in Russia. They're holding him safe from the American government. But when you watch this and look into Snowden, you'll see that this kind of tech and the ability to search and turn on people's cameras and listen to people's conversations by governments, because you're not protected, and by ordinary people, was available in around 2010. So we're now 10 years later. Like, there is pretty much no way that you're not vulnerable now. Like, cybersecurity is the most important thing in the world right now, in my opinion. So what's the greatest cybersecurity threat? Is it insiders or is it outsiders? Now, most people will probably think that it's actually outsiders, but it's actually insiders. You're actually more likely to be attacked by someone that you know, or just like with normal theft, you're actually more likely to be targeted by someone that you know, or someone that's had close proximity to your phone to hack into your phone. So one of the things that you probably hear is the whole thing with having your bank cards and people using the near field communication to just tap your wallet or to tap your leg and cloning your card. Again, this is a huge thing that is going to happen. People's cards are going to get cloned more and more, or the data is just going to get ripped from the card machines. So just with everything being connected in the way that it is. So what are the biggest problems that people have? We have social engineering, we have hacking, we have denial of service attacks, we have physical theft, malicious USB drops, and malware. So malware is probably one of the biggest ones that is causing problems for people. So these are the things that are the problems, and we just have to think, with businesses spending more and more and businesses becoming more valuable, is it important for them to look at these things and to protect themselves? Of course it is. So in terms of cybersecurity, there is now over 20.4 billion devices on the planet, and this was actually in 2018, this data. So it's ever increasing. So since 2013, over 9 million records have been lost or stolen, or nearly 2 billion of those were in the first half of 2017 alone. So it's actually 9 billion. Sorry, I said much less than that. So we can see it's actually a massive, massive thing. All of this information that I've got here is available on the Facebook group. I'm going to send it out to anybody that wants any of this information in a little bit more detail that they can read through, because I just realized it's a bit small on the screen. I'll try and do something about that later on. So let's go to the next slide. No, it doesn't want to do that. Okay, what I'm going to try and do now is I'm going to bring up just a few ETFs that are in the cyberspace for people to look at. And then we'll also have a quick look at the Facebook, because it might have had those images there. Yeah, here they are. I don't know if they'll come out blurry. Yeah, they're just a little bit blurry again. Cool. So on this image, you can see the different motives behind cyber attack. You can also see who's behind the biggest data breaches. And you can see the kind of sectors that are likely to get attacked and how they're likely to get attacked. This is an example of all the things that are going to get attacked in the future. So being as we have the Internet of Things emerging and we have edge computing and cloud computing, people are going to be able to attack people's thermostats. People are going to be able to attack people's home robots. Say, for example, if you've got a Ring doorbell, people are going to be able to hack that and open your door when they feel like it. The same with autonomous vehicles. If technology evolves in the way we think it's going to, people are going to use their phones to unlock their cars and call their cars to them, which means that people will be able to hack people's cars and steal people's cars that way. And the same thing with e-payment, voice authentication, the same thing with 3D smart speakers. People are going to be able to listen in on people's conversations. This is something that's already started happening. Also with video resolution. So one of the things that we're seeing happen at the moment is the whole thing of deep fakes, where people are taking people's faces and manipulating them and putting them onto videos in places where they actually aren't. So it's very, very dangerous. The concept of deep faking definitely would tell you to look into that. Okay, cool. So then obviously we've also still got our wearables in the Internet of Things and our other smart devices. Okay, cool. So this is the cost of the increase of what cybersecurity is being spent in these different sectors and the kind of gain. That's up to 2018. So you can imagine now in 2019 and 2020, this is probably increased. You've got to look for consumer goods. That's a 47% increase. For capital markets, that's a 13% increase. For software, that's an 11% increase. For automotive, it's a 47% increase. And life sciences, that's an 86% increase. And that was 2017 to 2018. I'd love to get my hands on the data to show 2020. So we was already talking about the threats, already looked at that one. Okay, cool. So what are the types of security that people need now? They not only need home security, they're also going to need mobile security, also going to need cloud security, and also going to need physical hardware security, and then also going to need blockchain security for any crypto that people are holding. So we can see that the list of things that people are going to need is crazy. So here's some of the things, some of the biggest hacks that have happened recently. We've got WannaCry, HBO, Deloitte, Equifax, and Uber. One of the biggest ones that we know of, which was quite popular, was the PlayStation hack, when the PlayStation network got hacked and everybody's financial data was peeled from the website. So cool, that's all of that. So let's get into having a look at some possible things that we could actually invest in the cybersecurity space. Okay, cool. So first of all, we'll go with cyber, which is the First Trust NASDAQ cybersecurity ETF. And what we'll do with these, we'll just look at the charts and compare the charts on them. Let's just get rid of ARC. Oop. Bear with me a second, guys. Okay, cool. So this one is cyber, which is currently 45. I think that's dollars, or is it pounds? Let's just make sure. Currency in USD. So that's $45 currently for Cyber. Then the other one that's quite popular is called Hack. So we'll add that. So this is Prime Cyber Security ETF. We'll do this one in purple. So we can see they're performing pretty much identically. Great returns. Let's have a look at another one. Another one called I Spy. They've all got really cool names. This one here. You can see I Spy's done a little bit better than the others, but it's come down now. They've all kind of met up. But over a longer period of time, I Spy performs just a little bit better. Let's see if there's any others that I can remember off the top of my head. Or any others that come up. Evolve Cybersecurity. Oh, iHack. That's the other one. Oh, wrong color. Let's change the color of that. So iHack is producing the best returns so far there. So definitely one to look at for potentially investing in. Is iHack is outperformed Hack for quite a while. It's outperformed the blue one, which is Cyber. So definitely have a look at investing into iHack. Now, why would I recommend investing into iHack? Why am I going to invest into cybersecurity? Just because if all the proverbial, I'm going to swear, if the shit hits the fan in terms of war, where is it going to be? It's going to be a cyber war. And that means that more money is going to go into cybersecurity. Like, it's just a given. Like, even if there isn't a cyber war, people are still going to want to protect themselves. So whether it's investors or retailers, so it's still going to benefit. So let's do some digging, because I know you like it when we do some digging. Can I put the poll out? No, I can't. For digging. Okay, so let's have a look at what whales have invested into iHack. If the whales are in, if the right whales are in, then it's a good sign. Oh, it's not bringing it up. So showing their holdings. So this is the things that are apparently inside iHack. Alarm.com, BlackRock, Treasury funds. Interesting. Checkpoint Software Technologies, Citrix Systems, CrowdStrike, CyberArk Software, Digital Arts Inc., DocuSign, Everbridge, FireEye, Fortinet, Juniper Networks, Mantech, Microfocus International, Mimecast Limited, Mighty G Services, Zix Corp, Zscaler, VMware, Varonis Systems, Trend Micro Inc., Tenable Holdings, Science Applications International Corp, SailPoint Technologies, Radware, Rapid, Qualys, Proofpoint, Ping Identity, Prospector, Palo Alto Networks, Okta, Norton, LifeLock, and NIC. So obviously the biggest one that I think most people have heard of is Norton, but why take just Norton if you can take the entire industry, which is what I would probably recommend. Cool. So let's have a look at who's playing around, who's got the biggest holdings. Anyone want to take a guess?
BlackRock.
And the survey says, oh, it's actually not BlackRock for the first time in a long time. Okay, so the biggest holders are Thrivent Financial, Bank of America Corp, Goldman Sachs, and we can see the top 5 biggest holders. What have they done? They've increased their position. So out of all the biggest holders, there's one person that's reduced their position. The only other company that I've seen that has had this many people increase their position is Apple. So that says a lot. Prior of their portfolio. So ranking, let's see who's got it as number 1. So no one's got it ranked as their number 1 holding, but yeah, that's interesting. No one's got it as their number 1. And these were the guys that had it as the largest part of their portfolio. And they had it as 2.7% of their portfolio, and they reduced it to 1%, which doesn't make any sense to me. But hey. But yeah, we can see all the other investors aren't really that bullish on it. They're not like crazy on it. But I think that's just because nobody sees it as important yet. I think it's definitely going to be important, if you ask me. So that's that. What I'm going to do now is I'm going to quickly break down fundamentals on a company that I've been asked to break down, which is Shopify. So we'll just quickly have a look at that because Shopify is kind of the leader of e-commerce. I'm quite a bit of a fan of Shopify just because my favorite CEO, one of the former CEOs of Adidas, a guy called John Wexler, has gone over to Shopify. So Shopify's new plan and new direction is that they want to start helping music artists and athletes launch their own brands. So John Wexler, who bought Kanye West, Pharrell, Paul Pogba, James Harden, all of these people he bought over to Adidas, A$AP Rocky, you name it. He's now going to be trying to bring those people to Shopify to launch brands instead of just having trainer deals or a quick like clothing line, which when you think of the amount of money they could turn over from doing that is crazy. So let's have a quick look at Shopify. I can't even remember the website that I use. Oh, Hypercharts, that's it. So this is the website to use for beginners if you want to just have a quick look into a company. So we'll have a look. So I was going through this in a quick investing lesson that I did with somebody called Morgan. And I just asked him to pick a company and he picked Shopify. And Shopify had been on my radar, but I'd never noticed something that I'm about to show you guys. And then I was like, this is an absolute hidden gold mine. We'll see. What are the Coinky Dinkies that I just had a sponsored ad for Norton Antivirus? Anyway, so let's see if anyone can notice why Q3 2020 was the year that you got your green light to invest in Shopify if you was going to do it. Anybody know why? Any guesses? It's something to do with their operating income. Look what happened in the third quarter of 2020. That had never happened before. That was the first quarter that Shopify had actually made profit. Which for me, I was like, hang on a minute, this whole time Shopify wasn't even making profit. And it's at the price that it's at now, and it's this hype already, and it wasn't even a profitable company. Now, we've seen another company that wasn't making profit and then all of a sudden started making profit blow up, and that was called Tesla. So could Shopify's revenues increase? Let's have a look. Have their revenues increased dramatically over the last couple of years? Let's just do it in yearly instead so we can have a bit of a better breakdown. I'd say yes. From 1 billion revenue to 1.5 billion, I think, especially with their new partnerships and the way everything was going with Amazon and Facebook, they are more than capable So when I first looked at this, this is what I saw. I didn't see it on the quarterly. And then when I looked on the quarterly, that's what gave it away. So we can see in a 1 year window, they've gone from minus 31 million to 35 million to 191 million. What the actual fuck? Like, what the hell? Ah, yeah, Dom's got a good point. That's probably why they do block me on YouTube, because I swear. I thought they were blocking me on YouTube because I was talking about the Rothschilds, but maybe not. So let's have a look at the Shopify chart. So we'll break it down out into the monthly. So we can see here, beautiful uptrend. This was the, was this lockdown? And weekly, beautiful again. So here's the moving average that I was talking about. So this is the 20-day moving average. Well above it. So potential buy price is actually right now, being as it's just hit the midpoint of the Dochan. So I think I might have to go and load the boat on this one. And it's hit the 20-day moving average. So I think I'm going to literally invest in this tomorrow morning. So that's that. So then what I would recommend anyone to do after going on hypercharts and looking at the company, this is how you find out some information that no one else is looking at. Just simply type in Shopify, investors relations. And only true investors, only people that literally work for Wall Street and stuff like that look at this stuff. But it's available to look at, but nobody looks at it for some unknown reason. So this is where we can just get a quick, nice, clean breakdown of the Q3 2020 results ahead of their Q4 results, which I'm expecting to be amazing. So this will outline their risks. Retail is changing. Yep, that is true. One platform, every channel, any device. Single integrated back office. Entrepreneurs. So it's £29 a month, then £79 per month, and then £299 a month, and then £2,000 a month for the large brands. Is that a fair price? Yeah, I think so. Total addressable market is worth 78 billion. And they're revenuing 1 billion. I think they've got some space to grow. Search engine marketing, digital advertising, Shopify blog, content marketing, global events, partners and affiliates. Little stories about different people that've got businesses on Shopify. What's this? Brands that they work with. Gymshark, Heinz, Lisa, Heineken. It's crazy to think that they don't have that many bigger brands working with them. Lowering barriers, simplifying operations, catalyzing merchant sales. International expansion. Platform expansion onto eBay, Instagram, Google, rich extensive partner ecosystem. We've got a bit of personal growth in there. The numbers, strong and competitive. Wow. Share of US retail e-commerce sales since 2019. They're actually second to Amazon. So I would say Amazon's like the established brands, and then the entrepreneurs and startups is Shopify, especially all the drop shippers. They're all over Shopify. Is that going to be a growing thing? Entrepreneurship? Yeah. Strong, consistent revenue growth. Yep. Beautiful. Consistent, accelerating growth. Yep. Look at that spike. And that's in lockdown. This is what I'm hoping people realize is Q3 was lockdown. They had made the most profit ever during a global pandemic. So revenues and where they're coming from, again, all increasing. Strong, consistent growth. Gross profit increasing 57% to 46%. Improving operating leverage. It's good. The decrease in that. Building for the long term. Six River Systems. So Six River Systems is a company I would definitely check out. What they do is they have robotics. They're like warehouse robotics. And again, you've got to think, if you're running, this is a company that would be buying security, cybersecurity. All of these companies, Shopify has to buy cybersecurity. They have to. Anyone with a Shopify business has to get cybersecurity. Anyone with a warehouse with robots in it has to get cybersecurity. If you don't, then you're just opening yourself up to be attacked. So yeah, this is all looking good from Shopify's investors relations. I'm pretty happy with those numbers that I've seen. So yeah, I'm probably going to invest in that. Okay, cool. Was there anything else for me to go through? Yes, Mike, more e-commerce drop shippers are moving over to Shopify away from Amazon as too competitive in pricing on Amazon. Yep, damn straight. So does anyone want me to touch on cryptocurrency and on blockchain? Yay, nay? Yes, please. Can I have some more, sir? Okay, cool. We'll do a quick blast on cryptos. So we'll do blockchain.com. This is a website that you can check out. Actually, let me just break it down for everybody that's on the call, because I think it's important, being as we're discussing cybersecurity, why discussing cybersecurity is necessary for me to discuss blockchain. Because if you don't understand blockchain, you don't understand cryptocurrency, you won't understand why there's going to be a massive cybersecurity revolution. So let's just kind of break it down a little bit. How does blockchain work? Blockchain is basically, I don't know if any of you ever used Pirate Bay. I did. I'll hold my hands up. I know Dom did. I don't know if any of you used LimeWire, BearShare, anything like that, to BitTorrent. That is blockchain, essentially. So when you were using, is that everyone in the chat going, yeah, they used it? LimeWire. I did not have sexual allegations. If you remember that. So yeah, blockchain is exactly that. So it's basically the idea and the concept whereby a piece of information is split over multiple computers. So when you was downloading things off LimeWire, off BitTorrent, what would happen or Pirate Bay, what would happen is you would say it's seeds and leeches. Now the seeds were the amount of computers that were connected to the Pirate Bay or the BitTorrent or the Ares network or whatever it was. Now, what would then happen is the more people that were actually on the computers and they were connected to the internet, the quicker your file would actually upload. Because what it would do is it would split your file across everyone that was classed as a seed. Now with cryptocurrency, the difference is it's not everyone that's classed as that opens up their computer to be a seed. What ends up happening is that everyone's computer that is connected to the network has an algorithm that they're trying to figure out that then produces a coin. So all the computers together spread the information to try and figure out this algorithm. Now, the reason that the Bitcoin becomes more valuable is because every time that a coin is created, it gets harder. The algorithm gets harder to calculate and uses up more computing power. So when Bitcoin first launched, it didn't need that much computing power. You could do it on like a Windows 95 computer. Then it evolved so that you can maybe do it on a phone. Now it's at the stage where you need like a whole warehouse worth of servers to mine one coin. And because of how expensive it is in terms of energy, that's where people are kind of calculating, well, this might be the value of it, if that makes sense. Hope that's made sense. Now, with a different cryptocurrency, which is called Ethereum, what happens is there, instead of it creating a virtual coin, what it does is it creates a virtual contract. So the internet is made up of ones and zeros, just like in the Matrix when it's ones and zeros, ones and zeros. What Ethereum does is it creates a yes or a no. So that means that through this, instead of ones and zeros, it's yes and no's, you can still build a whole like version of the internet. And this is what people are doing with Ethereum. Every time a computer mines, which is solving an algorithm, it creates new space on the Ethereum network, which can then be used to create websites, apps, you name it. So it's got a better use case. So to find out more about cryptos, all you've got to do is literally go on Google and type in Bitcoin white paper. Here it is. And this will just explain everything about Bitcoin, how it works, who created it, how it's mined. And for every single cryptocurrency, you can do this. So why is there a big hype on cryptocurrency? To understand that, you have to understand money. So I think I did it before. I think I typed an image of fiat currencies. So what ends up happening is the global governments money used to be backed by gold. So for equivalent of $1, you'd get $1 worth of gold. This is called this is when it's backed by gold. Then fiat is when it's not backed by anything. So right now, most currencies in the world, pretty much all of them, are not backed by anything. So this is why it's bad. Now, also reason why money is bad like that is because it means that because it's not backed by anything, it means that it can be manipulated by politicians, and it's also very hard to track all of it. So where am I? I can't even remember where I am. So yeah, there's a lot of bad negativity with the way that it's used: agendas, war, corruption, so on and so forth. Now, one of the biggest problems with money at the moment is how long it takes for a transaction. So let's say, for example, if you're doing banking over around £10,000, or if you're investing in stocks and assets, it takes between 2 to 3 days to have your money come out of that investment. And this just slows down the whole investing process. So say, for example, you sold your Apple shares on Monday, you'd actually get that money on Wednesday, but the price could have changed. Now, this is a massive problem because obviously if you're investing like BlackRock and like some of these other hedge funds that we looked at earlier, where they're investing 2 million, 3 million at a time, and some of them even hundreds of millions or billions, you're not going to want to wait 3 days for your 9 million shares, £9 million worth of shares to come out. You're going to want that to happen as soon as possible, and so that you can then quickly invest it into something else, which isn't what happens at the moment. So what we can do on blockchain.com is it actually lets us see all of the transactions that are happening at that moment in time with that crypto. So let's just go blockchain.com. So if you're mining cryptocurrency and Bitcoin is worth 33,000 per coin, imagine you've got a computer that's mining it and then you start getting hacked. That's a nightmare. You just spent all this money to build all these servers, to do all this stuff, to get all this Bitcoin money, this virtual coin, and then you start getting hacked. And even worse, if you're mining for Ethereum, people can not only hack your coin, your Ethereum coin, they can actually also take your website. You can take your app that you've created. Now, because of blockchain, they wouldn't be able to actually hack and take the coin, or they wouldn't be able to actually take the website, but they'd be able to hack and get the access codes. So that's the difference between things being on the blockchain, is you can't hack them because the information spread across multiple computers, whereas you can still be hacked to get access codes and wallets. So what we can see here is the amount of transactions that have happened in 24 hours using Bitcoin. That's 294,000 transaction volume. You can see there. And if you just wait, we can see all the latest transactions as they're happening. Now, this is the difference with cryptocurrency, is you can see all transactions as they happen, because what happens is each time there's a transaction, it's stored within the network. Cool. So we can see that one transaction 14,000, transaction for 1,773. Now, this is the last time, the last block of the blockchain of crypto that was mined. So we can see, and we can see how many the file size of it. So it was 1.3 gig, I think that is. I'm not too sure. You're gonna have to tell me. I'm not really that great on that. So I hope that's making a little bit more sense and making you realize why cybersecurity is becoming even more and more and more important. So again, you can see here the whales investors versus traditional investors. Okay, cool. So now what we're going to do is we're going to go to coin market cap. Giving you absolute gold here. Okay, cool. So coin market cap. This is a few of the coins that are out there. This is like the top ranking ones by popularity. So we see Bitcoin, Ethereum, Tether, Polkadot, Ripple, Cardano, Chainlink, Litecoin, Bitcoin, Binance Coin, Stellar, US Dollar Coin, Wrapped Coin, Uniswap, EOS, Monero. Okay, so what we're going to do is I'm going to show you the vulnerability in terms of why these things are going to become mainstream and why people are going to need security. Because let's say, for example, if you had a crypto wallet and you had 10 Bitcoins when they were 8,000 and it was 80,000, because it was at 8,000, I think it was in, when was it at 8,000? Just in the lockdown, it got to around 8,000, 12,000 pounds per coin. So let's say, for example, you had 120,000 pounds in that. The price has now gone up to 33,000 per coin. If you had that, you're gonna need security. Does it make sense why the security is gonna go up? Because people aren't gonna rob your house anymore. Why would you rob someone's house? Why would you take the risk of physically robbing someone when you could rob someone's crypto wallet from the comfort of your own home, change the passwords, and then you own it? It just makes sense. Okay, cool. So let's get into some of the details on Bitcoin. So there's only ever going to be 21 million Bitcoin created. And at the moment, we're at 18 million, as you can see. So as you can see that, so Bitcoin was originally $1 would get you 160 billion. No, $1 used to be able to get you 160 Bitcoin when it first started. So you can imagine there's some people out there that have got maybe 100 Bitcoin or maybe 200 Bitcoin. Do they need cybersecurity? Yes. So then in terms of, let's just understand the maths here. So what we have is we have market cap, which is here, and we have circulating supply, which is here. So if you divide the market cap by the circulating supply, you'll probably get something close to the price. So let's just get a calculator and do that. I hope I'm not boring anyone with this super techie stuff. Okay, cool. So the market cap is 620 million. Is that billion? So the global crypto market cap is 979 billion. It's a 4% increase over the last day. Oh yeah, so it could be 620 then. So 620, we'll call it 1, 2, 3, 4, 5, 6, 7, 8, 9. Divided by the circulating supply, which we'll call 18,000. No, 18 million. 1, 2, 3, 1, 2, 3, which gives us the price of 34. 34444. So we can see when we divide the market cap by the circulating supply, that's what we get. We get the price. So for Bitcoin to get to double this price, we would need it to double its market cap. So it would need to have 1.2 trillion invested in it for it to be worth 66 pound a coin, 66,000 a coin. I hope that makes sense so far. Okay, so if we want to figure out the market cap, then all you do is you do the price times the circulating supply. So this time we'll do it with Ethereum. So the price is 1,360, and we do that times the circulating supply, which is 114 million. 114, we'll just go 1, 2, 3, 4, 5, 6. And that gives us 155, which is correct. So then market cap divided by the price gives us our circulating supply. So I hope that's making some sense to people. So what we've got to look at is the market cap versus the price and what it would need to get up to a higher price. So we've already calculated that for Bitcoin to get to 66, it would need 1.2 trillion. So yeah. So for Ethereum to get to that, how much would it need? Does anyone want to do the maths? Yep. Yep, 100% David. Exactly what you said. Ethereum is better long-term just because it has better use cases, because you can build a network on it. So people can build websites and apps which have a value, whereas a virtual coin is just people kind of agreeing that it's worth this price, and large investors. And also it's got a limit of 21, whereas Ethereum, it actually has 18 million coins added every year. So why does it have 18 million? Because with Ethereum so think of it like having a physical coin versus a coin that's laid down on the floor or metal. So the best way that I always describe it is Bitcoin is like the fruit and Ethereum is like the wood. With wood, you can build houses, you can build boats, you can do more with it. Whereas Bitcoin, you can't really do anything much with the fruit apart from eat it or sell it to somebody else. Cool. So in terms of the market cap, what's going to be needed for Ethereum to grow? Ethereum, we can see that at, let's call it 100. Let's call it when this gets to a trillion market cap, it'll be way higher than Bitcoin, basically. But yeah, that's that. I hope that's made sense on why cybersecurity is important, and why crypto isn't really going anywhere. and why it's not actually stupid. If you actually understand it, then it starts making a lot of sense. Yeah, so Bitcoin's like gold and Ethereum is like silver. People use silver more like than gold. Like silver's got more use cases than gold because you can just do more with it. It's more malleable. It's just logical. People have silver in their cars whether they don't have gold in their cars. People have silver knives and forks, but they don't have gold knives and forks unless you're mad bougie. Coolios. So we've got quite a few people in the call. I'm going to open up the call now so anyone can ask me any questions on anything before I end. Where does Ripple fit into this? So Ripple is the coin that is best backed by the big banks like JP Morgan and HSBC and different states. So Ripple is the most likely to be used as a currency transfer. So what will happen is more than likely different countries and different banks will create their own cryptos. There'll be like a Barclays crypto or a US, like a UK crypto, the sterling crypto. And what will happen, and again, you've just got to think, once these governments and these banks start doing it because they have to, because it makes more sense and everyone's doing it, what's going to happen? An increased demand in cybersecurity. It's just a duh. So yeah, once they start doing that, then Ripple will kind of be like the digital currency converter. You know, when you're in the airport and you go to the place and they convert your money, instead of it being a human being, it will be a coin that will convert it. So this Ripple will kind of be like the middle person, and then it will go to whatever coin. That's the theory that people have behind Ripple. Whether it's actually going to be like that, who knows? We'll see, because it's being investigated at the moment and it's going through a lot of stuff. So we'll see. How to invest in these? You can use Coinbase or Binance or Revolut. If you want to invest via Coinbase, let me know. I'd really appreciate it if you use my referral code, because if you use my referral code, then I get some cryptocurrency and so do you. So that'd be very nice of you. Just message me and I'll sort that out for you. Because I wasn't really using referral codes before, but I've realized I really need to start doing it. Okay, cool. So I'm going to take 2 more questions before, because it's almost 9 o'clock. Do I think they have more use cases than Ethereum? No, I don't think it's possible for anything right now. Out of all the white papers that I've read, Ethereum just has the best use case, just because they're creating the internet 3.0 pretty much. One of the problems with the internet is that it's not secure, and people get hacked too easily, whereas with Ethereum, websites on the Ethereum network won't be able to be hacked. They would require people to clone people's keys. Instead of just hacking the website and stealing all the information off the website, you'd have to clone someone's key. But then if you're using a separate part of the Ethereum network to make the keys, then you'd have to hack. You'd have to it's pretty much impossible, if done right, to hack things on the Ethereum network. It's possible, because nothing's impossible, but it's very, very difficult. Just different level of, a human couldn't do it, basically. Only an AI system would be able to do it, to hack things that are built on the Ethereum network. So that's why, and again, you've just got to think of use case. So all it takes is someone to build a very important app on the Ethereum network that everyone uses, and the entire value of Ethereum goes up. So let's say, for example, if someone builds the new version of Facebook on Ethereum, or what's a thing that revolutionized everything? So you know, like how MP3s became a big thing. What if the next big thing is put on the Ethereum network? It just makes the value of it and the use case for it mind-blowing, because it allows, the Ethereum network is built around creation, and creation equals money. And last question, if anyone's got one more for me. Hope you've taken some value from all of this. Peeps. It's been one of my favorite sessions so far. F in. Coolios. That's me done for today. Thank you very much for all attending. I would definitely, why did IG stop trading crypto for retail traders? It stopped trading it because the volatility got too much. So and also there's a lot of people scamming people, telling people that they're going to get crypto when they're not. That's why. So the names of the ETFs: Cyber, Hack, iSpy, and iHack. Check them out. The one I'm running with at the moment is going to be iHack. I'm going to do a bit more research on them, but I'm running with iHack at the moment. Cool. Thank you very much, guys. I'll see you all later. Bye.
Nice one, Mike. Cheers.
No worries, bro. See you in a bit.
Thanks, bro.